Tell us a little bit about Kevin behind the Meet Kevin ETF. He kept this fund going for about 2 years, but as Katie was just telling us, poor performance doomed it. What was the premise behind this fund?
I think there's a couple of different aspects to this story. One is what you just pointed out, which is that he was running an ETF that was actually lagging the market pretty heavily, even though he is a stock picker. So he was choosing his own stocks that were going into the ETF. One of them, for instance, was Yelp. There were only about a dozen or so companies in the ETF, along with a leveraged treasury ETF in there, but it really lagged the market pretty heftily.
So it feels like the premise behind it was, trust me.
Yeah, pretty much, which, I mean, if you think about a lot of these ultra-concentrated active equity ETFs, that's basically the pitch. You should trust me because I'm so smart. So apparently that didn't quite work out here. But talk to us, too, about the economics of this. This is something you and I talk about all the time, the brutal economics of the ETF industry. I mean, if you combine the fact that it didn't gather a lot of assets, not a lot of fee-bearing assets, with the upkeep costs, I have to imagine that's some pretty difficult math.
Right. That's the other big aspect to this story, I think. And Meet Kevin, he obviously has a really large YouTube following. He put out a video announcement saying, I'm closing this ETF. And he actually laid out a lot of the costs that are associated with running an ETF, which is, I feel like, an untold story of the industry, in that it can be very expensive to just upkeep with your ETF on an annual basis. So if you're not attracting a ton of assets, then those costs can really add up. And in the video, he said he estimates that he lost something like $1 million, even though the ETF actually charged a relatively high expense ratio.
Well, that's really interesting, and I'm glad you brought that up, because it feels like it is very easy to launch an ETF. You think about all these record launch figures that we've seen over the past couple years, but I mean, there's some great data out there. You think about Citigroup, for example, has put out stats that actually a lot of these ETFs don't necessarily make money. They don't meet their break-even costs.
Right, they don't. And we're seeing a bit more data around this topic in recent months, in recent weeks. I think this is a very good example of that actually playing out in the real world. But then again, the third aspect, the third interesting aspect of this to me is that he did have this large social media following, more than 2 million followers just on YouTube alone, and it just did not translate into assets. So you can have a very large following, you just might not necessarily be able to translate that into success for your ETF.